I don't know, is it?
All
All
There
right.
we go. The mic is on now. So it's recording with the mic on.
Perfect.
I am breathless. No,
Too much running around.
yeah, I was gonna say it's not because of you, Cyril. No, you're a swell guy.
Oh, man's got jokes. That's all right. That's all right. If I'm going to dish it, I better be able to take it too, right? Or at least that's what my wife tells me.
Yeah, yep. So there was quite a few people that were interested in this thing. So is this your first AMA about the Krew fund?
Yeah, I mean, like I said, I just started it 2 days ago. I haven't been really actively promoting it. The whole deal with it is I don't care if there's like 1,000 in TVL in there or a million in TVL in there. I initially started the Cure Crew Fund for my friends in my trading Discord, um, but the interest surrounding it rapidly expanded and people started asking about it and talking about it, and so I was like, all right, I guess I'll just kind of open it up to everybody. But I haven't been posting like my own link for it because I enabled the referral rewards so that other people who do want to share it can benefit from it, since I don't really care, right? uh,
Well, that is very generous of you. You know, you think you're not a generous guy. You are.
I'm
So
stingy.
it makes no difference. I guess we'll just kind of mosey on into it. It's 5 o'clock. I'm recording it, so if anybody misses anything, you can watch the recording, and hopefully it won't be terrible. Um, it pretty much it doesn't matter if there's like 100 people or 1,000 people in this. The price doesn't depend on how many holders there are, right? Or how much. It
Yeah,
depends on how much the assets that it's invested in go up.
exactly. So, are you guys familiar with like the stock market at all?
Boy, I'm not.
Like a little bit.
I mean,
Well,
I know what it is.
yeah,
I
it's that
just
it's that
You
weird
just
thing that
told me what the
everybody.
S&P 500 was like a day ago. So
Yeah, so on the stock market, right, there's a ton of different companies out there. And if you're trying to invest and grow a portfolio for yourself, you got to do research into every single company out there to try to figure out which is a good one to buy. And that's why index funds exist. The Dow, the Dow Jones Industrial Average, is technically an index fund, right? It's comprised of 30 companies. The S&P 500, also an index fund, is comprised of 500, you guessed it, companies.
so
And
the
each of those
S&P is only
companies,
30 companies?
no, the Dow Jones Industrial Average is 30 companies. It's the
Oh yeah.
30, I forget the exact criteria, but it's like 30 of the largest companies.
Interesting.
And the S&P 500 is 500 companies. Um, the NASDAQ is also an index, right? It's an index of tech companies. So what KKF is an index of cryptos, right? And it's comprised of Bitcoin, Ethereum, Matic. Those are the blue chips that are in there. And then I have PAXG, which is gold. So PAXG is a pegged token that's pegged to the price of gold, each troy ounce. And what they do is they have actual gold reserves in a vault, right? And that's how they get their pairing valuation. But I have the gold in there as a hedge against the dollar, right? Because if they go, if inflation data isn't the greatest, the dollar's going to go down. That's when gold tends to shine, right?
Hmm.
Then there is a splash of infrastructure protocols in the fund as well. They had to meet a certain criteria because I'm not a huge fan of most DeFi projects, but infrastructure protocols, I am.
Hmm.
Those are going to be your decentralized exchanges, the ones that are providing a foundation platform for other projects to build on. Like Balancer, for example. It's kind of a special DEX And what they do is they have different types of pools. One of them being the managed pool, which is what we used to build the index fund. So it made sense to have a little bit of that in there. But the infrastructure protocols, they represent a little more of a medium risk. That's why it makes up about, I think it's like 27.5% of the fund, and that's it. The bulk of it is going to be in your blue chips, in gold. Because especially for people who are just entering the crypto space, it's a lot. It's a lot to research. It's a lot to learn. And a lot of people tend to lose money their first year or two in DeFi because the learning curve is so steep, right? With the index fund, just like you don't have to research the 500 companies that make up the S&P 500, you're able to not have to research a whole bunch of different cryptos to figure out what you want to purchase. With this, you get the exposure to the blue chips, which blue chips are important because it's what everybody has to first buy in order to get into any DeFi protocol. So those, in my book, are the lowest risk assets. This fund is balanced in a way so that it represents as low of a risk as you can have in DeFi, while still having a little bit of exposure to infrastructure growth.
Interesting. Yeah, this, to me, this saves you from having to learn practically anything. You just, like someone who's not at all into crypto, you could tell them about this, and obviously they would need to find out how to purchase it, and you could help them with that, but just be like, listen, if you want to have a diversified crypto portfolio, the Cyril has got it for you. And then I can just tell them who you are, because they'll be like, who the heck's Cyril? And I'll be like, let me tell you. But yeah, because the learning is very expensive. I mean, I guess all education is expensive, but my education in crypto has been very expensive. and it just, I don't know. Obviously, like my journey has brought me to where I am, and I've learned things, and I've made friends along the way. So I don't regret it. But if I had something like this at the beginning, it would have saved me a lot of stress and anxiety and all that stuff. But
tuition costs, right?
Yeah.
I think we all kind of have to go through some form of that journey, that learning curve, that tuition cost, before we really kind of realize just how different DeFi is compared to traditional finance, right?
Yeah.
I went through that learning curve, and I had been trading for a decade prior to coming into DeFi. I'd been trading blue chips for 4 years prior to coming into DeFi.
Wow.
So it's and it was still a learning curve for me, figuring out what liquidity pool, means. Once I realized, it means share float, right? Things started to make a little more sense to me, but it was still a learning curve, and a lot of people have to go through a year or two of struggle in the space before they manage to accomplish that learning curve. So we're kind of aiming to cut down on that a bit. But that actually provides a good segue. Why should people care that I'm running the fund, right? So if you're good, let's talk about a little bit about my background.
Let's do it.
Awesome. So I started my business management experience when I was 18. I lived in the middle of no man's land, Virginia, and I was stuck on 14 kilobit dial-up, which made it very difficult, right? So I did what most people do when they're tired of their slow internet, and my buddy and I built an internet. It was a microwave point-to-point broadband high-speed internet company. We purchased a fiber optic backbone from Mid-Atlantic Broadband Cooperative, set up like 6 towers. The 6th was being constructed when we had to shut down. But
wow.
Yeah. So that's what we did.
How do you construct a tower? What is involved in that?
So you actually order the tower, right? I found some loopholes regarding zoning laws, and so all of our towers were 199 feet tall, and they had a ham radio antenna on top because that is federally protected. and they can't charge you communication tower fees if it's a ham radio tower that someone happens to be leasing the space right beneath it for communications equipment.
What land did you put it on?
So we would find good land that essentially had good line of sight, because microwave is LOS, right? And what we would do is we would approach the landowner and say, hey, we want to put a tower up on your property. What we will do is we'll pay you 10% of all the revenue off the tower. We'll pay for you to get your ham license certification, and then we'll install your brand new ham radio antenna.
I mean, did those towers give off radiation? Was that a concern at all?
No. The only time that's a concern is if people don't really understand how that sort of stuff works. Like the whole 5G, oh my God, it's going to give us cancer.
I don't know. I don't know anything about 5G, but I always thought that like radio towers gave off some kind of radiation or something.
Yeah,
I never like when I was flipping houses, I never bought houses that were close to cell phone towers, because I just figured it was probably not a safe place to live. I don't know. Is that bullcrap?
It is. Okay. Yeah.
Okay.
But that's good to know. Personal preference. Right?
I did know people who had kids there, and both of their kids had some mental issues. I mean, I don't know. Nothing. I'm sure it has nothing to do with anything.
You get more radiation exposure from your cell phone, from your laptop sitting in your lap, which, by the way, if you're a guy, don't do that. It can sterilize you. But nobody's freaking out about that.
I mean, I just had a baby, so.
Well, then you're good, right? But, yeah, so then about 15 years ago, I started my trading journey and managing my portfolio. I come from a family of a single mom. I was the second oldest to 8 kids, right? We grew up dirt poor. And I decided I don't like that. So I started my journey learning to trade, started off with stocks, went into the Forex market, started trading gold in August. And Oliver, I've sent you the screenshots of this so he can verify it's true. August 25th of 2019. Just to give you an idea of my chart analysis and kind of what I do. I made a post on my Facebook that said, from this date, the S&P 500 is going to go up between 12 to 18%, and then it's going to crash, and unemployment will triple. Did I send you those screenshots?
I'm sure you did. Like, we've had long discussions, so I don't know if I could find them again, but they're somewhere.
That's true. So most of my trading journey, right, was focusing on safely and slowly growing a portfolio from nothing, right? And I didn't have anyone to mentor me, so it was a journey. But I had built up from nothing to about 30 grand in 2019, right? And then I saw that on the charts. And a little bit of personal background, I am autistic. And one of the things that I'm good at is pattern recognition, whether it's in people, in things, places, etc., decision making. And I realized I could apply that to the charts. And so I saw this crash coming and started loading up on shorts on the Dow. And by the time everything was said and done, I had essentially bet the entire farm at that point, all 30,000 of it on this move. And I was shorting it at 75x leverage. Played out very nicely in my favor. In the same post, I made the target call for a targeted bottom of Bitcoin of the $4,000 region. It was chilling at around 11 grand at the time. And sure enough, it came down to 3,500, I think is what it briefly spiked down to, and then shot back up. So when it hit my target bottom for Bitcoin, I took profits on my Dow shorts and I put it all into Bitcoin. And then in July of 2020, it might have been 2020. Yeah, it's 2020. Sorry. The dates all kind of blur together. I used to run my trading group on Facebook as a messenger chat. And I posted in there, which, again, I have screenshots for that. I'll have to kick them back over to you just in case you haven't seen it. Um, and what I did is I made a post there when Bitcoin was at $9,863, and I said, "Hey, it's broken out of the long-term downtrend. It is targeting between 45 and 55,000. Bear in mind that the previous run had capped out just under 20 grand, right? But it was all based off of math. It's all based off of the long-term charts because that's what I look at. I look at the daily, weekly, and monthly charts. I'm not down here on the M5, M15 trying to scalp trade. I'm looking at the long-term macro. And so what I wound up doing is I started DCAing my way out of my Bitcoin around the 50K region because that was smack dab in between what I called. Yeah, so I've just focused on managing a portfolio of my own for so long, teaching people for the last 8 years how to trade, how to read the charts, how to become successful in what they do. And I've been kicking around the idea of an index fund for crypto for, 3 years at this point, because I knew the learning curve was steep, right? I knew a lot of people wound up going through a lot of pain during their first year or two in crypto. And I'm like, what if we could help prevent that, right? Give them an easy spot to just park some funds because they want to get involved, but they also don't want to get, beat up and rugged like 8 times before they finally start to make some money, right? And while they're spending the time doing their research. So they can just plop it in there, spend the time getting involved in the space, doing their research, really figuring out what's what. And then at that point, their nest egg has grown because the crypto market generally trends upwards overall, especially the blue chips, right? So when I realized that the Cassandra DAO platform enabled you to go in there and make your own and manage your own index fund, I was like, all right, yeah, let's do this. And so KKF was born.
Awesome. So, Cassandra was the Cassandra protocol. Is that what it's called?
Cassandra DAO, yeah.
Cassandra DAO. Is that exclusive to Matic? It only exists on Matic? Can you hear me?
So no, they have. Yeah, I can hear you. Can you hear me?
Yeah, I can hear you just fine.
Okay, it seems to be a little bit of lag.
Shoot.
But yeah, it's called Cassandra DAO, and they are on Polygon, Arbitrum, and AVAX. So KKF is the first fund that I'm making. It's the low risk fund. I will, once this fund is more established, I will be making a medium risk fund and a higher risk fund. And then once those 3 are in place, I will do the same on Arbitrum, starting off with a low risk, then doing a mid risk, then doing a high risk. That way people can select the level of their risk appetite. There's going to be a lot more volatility in the funds that are mid and high risk, right? But the rewards could be higher, but the losses could be higher too. So that's something to be aware of. And that's why I wanted to start off with the low risk fund.
Awesome. And so pretty much that story you were telling us, and I don't know why there's a delay, but I can hear myself in my headphones every now and then a second later. But pretty much what you were telling us with that story is you are much, well, I want to say this without insulting anybody, but I'm pretty sure you're much better at timing the market than most people. You like, for you to be managing this fund is in much better hands than if I were doing it, because my trading is questionable, highly questionable.
Oh, that's all right. And that's the thing. Trading isn't for everyone, and that's okay, right? It's trading isn't as complicated as a lot of traders like to make it seem, right? It's all about gatekeeping the information for some reason. I've never charged to teach someone how to trade because I don't believe in gatekeeping information, and I think if you have to charge, you're probably not good enough to make your own money, right?
Yeah.
It's like they say, those who can't sell courses. But not to insult anyone who does sell courses, I get that sometimes getting a little something for your time is valuable, but I think if you've done well enough to truly be successful, you don't have to charge. But that's just me. And that's the same reason why I kept the deposit fee for the fund as low as I did. It's at 2%, which half of that goes to the protocols and people who use the refer link, right? And then the other half is just, I guess, a little stipend that I can use to either feed back in as revenue to one of my protocols, or maybe set aside an investment fund, or who knows, right? If you were to try to buy all of the 10 assets yourself, the standard slippage is 0.5%, right? 0.5% times 10, that's 5%. So just you going out to go collect the assets yourself, you would pay 3% more in slippage than you would to just deposit into the fund, right?
Yeah.
And the cool thing is, once you have deposited into the fund, you have two different ways you can choose to withdraw when you do want to withdraw, which there's zero fee for withdrawal. It's your money. You already paid the deposit. Take it when you want, right?
Awesome.
But you can choose to withdraw it as a single asset, in which case it will convert the assets that are under your fund, your portion of the fund, back to like USDC or USDT or any other asset that's tradable on Balancer. If you want to switch it to Sphere as the asset you withdraw, you can, right? I don't know why you'd want to, but nah, I kid. Or you can withdraw as the basket, right? So if you wanted to withdraw that way, it would literally send you your share of all 10 of the assets. So you'd get the Bitcoin, ETH, Matic, Gold, Curve, etc., sent to your wallet. So it gives you the choice of how you want it. And there's no lockup period, so you can take it out whenever you want. Whenever you think, oh, cool, the fund went up 15% today, that's all I wanted, I'm going to cash out, right? It's up to you.
So what's unique about this is you are managing it. So literally just put your money in there and Cyril will manage it for you. He knows a hell of a lot. I mean, not to give you a big hit or anything, but you know a lot more than most people. All right, you showed me. You pretty much told me how much you have in your portfolio, and that secret is safe with me. But it's a lot. If you saw it, you'd be like, God dang. He knows what he's doing, and he's built all this by himself. He didn't get like $1 million grant from his daddy or anything like that. I mean, not that there's anything wrong with that. Okay, but
I wish.
So like you have a trading connoisseur doing this trading for you, and you said that when the market starts to get hot, and this is where like all of your chart reading and all that stuff comes into play. You have an idea of where like Bitcoin is going to top out and where other things are going to top out. When you say the market starts getting too hot, you'll take the fund from that specific crypto and put it into a stable. So you'll like lock in the profits from that. So like in essence, go ahead.
I was going to say, yeah, because how many of you have bought before something pumped and then held it till after it was no longer pumped, right? That's a story that reigns very, very true to everyone in DeFi. I'm in one project, right? I put in, used to be in that project. I sold. I had put in about $3,200. It became 112 grand, and I took profit. Right? I sold. And then everyone else in the Discord was sitting there crying when the price came back down to where it started. And I was like, well, didn't you take profits? And they're like, no, I should have. I just thought it would keep going up. Right? How many of us here have done that? I will admit, I did that once too. My first time in DeFi, before I fully understood like the way DeFi works and how liquidity pools operated, and that it wasn't just like selling your shares on the stock market, right? Or selling something on Forex where you could just click the button and you got your value for it. So I've been there too, right? I think we've all been there at some point. And that's what I'm doing here with the fund. I know it's hard for people to take profit, right? So when I believe that the markets have topped out, I'm going to start shifting the asset balance to stable coins. And then at that point, if people want to withdraw, go for it, right? We've been free to do that all this time. If not, and they want to stay in the fund, then as the markets start to come back down for the bear cycle, I will start transitioning over a period of time the stable coins back into asset classes. That way you don't have to go through the 80% down part and then DCA down here to make yourself profitable again.
That's what blows my mind. This fund, like, because you are doing this, has the potential to just never go down, right? I mean, it'll in essence.
I wouldn't say never go down, right? Overall, though, like annually, yes, the fund should always present positive.
Yeah, I mean, obviously, you can't be watching it every minute because there is a little bit of fluctuation, but it's not going to go down 80%. Like when when it's hot, you're going to take the profits, put them in stable, and you're going to wait until like we're well into the bear to start putting it back in. So it's like for a period of time, it might be stagnant, but the price will not have dropped very much, if at all, at that point. And then it'll start. I mean, if you start putting it back in the bear, it's hard to time the bottom, I guess, but you can time it better than any of us can. So
that's
when you start,
you DCA it back in and you shift it back to stables over a period of time.
So yeah, I mean, this is like any money you put in this is going to be in very good hands. Like and honestly, it makes me wonder how stressful is this going to be for you? Having like how is it just what you do for your own portfolio already?
Yeah, pretty much.
Oh, wow.
Like when you have a portfolio that's comprised of the stuff that mine's comprised of, you don't sit there and micromanage it, right? Micromanaging your money is how you typically lose it, right? How many times have you guys hopped into something and then it started going down, so you hop back out of it, realized a loss, and then it shot up, right?
Mm-hmm.
I'm sure that's happened to everybody here at least once, right? That's the emotional aspect of it. And so I'm not going to sit here and screw with the weights of what's in the fund until it's had at least a quarter of data, right? So 3 months worth of data. End of March, I'm going to look at it. I'm going to take a peek and see, okay, is this asset performing well? Is it correlated with the other assets? Actually, let me, in the chat here, let me real quick post a screenshot of what you can expect from the quarterly reports that I will be releasing for the fund, right? 1 second. There it is. There you go. Now, obviously, the numbers in the top right-hand corner for February and March are just goals of mine. But, that was accurate data as of like this morning. I was just keying everything in while I was building the spreadsheet. And don't forget, Oliver, you are still muted. Genevieve's going mental right now.
It's because my baby's going crazy right now inside, so I don't know if you guys can hear it or not.
Nope.
Okay, well, her mom's, taking care of her. It's not like I just left her in there. That's why I keep muting myself.
Yeah, no worries. We can't hear her, so you're good.
Okay, cool.
Yeah, so this is I see a question from Crash asking how it's better, easier than Warfi or Warhaven, or just different. So this is different, right? Warfi and Warhaven, what they do is they have bot trade accounts, and people buy the NFTs, and then they take those funds and they put them in the bot trader account, which, bots work great until they don't, right? Because they operate off of a set of standards. So just be mindful of that. That's why I don't use bots when I trade. I've always done manual because I've seen bots work great, print out great results, like 60% a month, and then the market changes, and it just goes and it just loss after loss after loss, right? What this is it's essentially, it would be as if you took $100, right, and you put $19.50 into Bitcoin, $18.50 into ETH, $18.50 into gold, $17.25 into WMATIC, and so on and so forth, right? But you're going to wind up paying 5% slippage, and then you're going to have to sit there and decide when to sell it, when to take profit. You're going to have your standard emotions messing with you. I don't really feel emotions. That's part of the joy of being autistic, I suppose.
That was my
So-
next question segment, was about your emotions or lack thereof. Okay, go on.
Yeah. So people can learn how to make emotionless decisions, but you can't learn to be emotionless because you're human. You're never not going to have emotions. It's important to feel it, experience it, let it go, understand the why you felt that way, but wait until you've let the emotion go before making any decisions. That's how, when people say be emotionless with your trading, that's how you do it, right? Because you're never not going to have the human emotion of, oh my God, it's going down. I'm in the red. I'm losing money, right? Let me just protect my my losses and sell, right?
Mm-hmm.
It's just, you don't make a decision while you're experiencing an emotion, and it's very difficult for a lot of people to separate themselves from that. Plus, if you took the $100 and you went and got all the assets yourself, you'd be paying 5%. Because slippage, 10 times 0.5%, that's 5%, right? The fee for the fund is 2%. So, and then all of that takes place on the back end.
Right. And you were saying that it's only going to be like every 3 months, every quarter that you're going to. Is that when you're going to be putting out a report, or is that when you're going to be like looking to make any changes?
Yeah, so with any kind of lower risk long-term fund, you don't want to sit there and micromanage it. You want to have plenty of data, because like the reason why I trade the daily, the weekly, and the monthly charts is because it's a lot of data, right, over a long time period, and so it's a lot easier to see what moves it's going to make way ahead of time and position yourself accordingly. And so I don't want to sit there and be tweaking the balances and adjusting things constantly, because one, that's not going to be an efficient use of the fund's money, because it does still have to go through, swap the assets whenever I'm doing a balance adjustment, etc. And that's slippage, that's expense, blah, 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 right? So my current plan, unless I see an asset that's suddenly going belly up, right, which with the protocols that we've selected in the low risk fund, it's a non-zero chance of something like that occurring, but it's pretty close. It's pretty low, right? That's why I selected the assets I selected. Every single one of those assets operates a piece of DeFi, like Balancer. It operates all of these different liquidity pools. It's an exchange platform, blah, blah, blah. Uniswap. We all know Uniswap. It ain't going anywhere. Same for QuickSwap. That's why these assets were selected. That way I don't micromanage them. I only make adjustments every quarter if necessary. There's going to be some days where it does go down that day because all of the assets in the fund went down a little bit, right? That's going to happen. That's okay, because with the asset class selected, we know that this is going to trend positive over the year. Just like the S&P 500, it has some red days, right? But annually, it presents between 11 to 13% on average of annual profit. Obviously, because this is crypto, we can expect that percentage to be more in line with the general growth of the crypto market cap. So if the market cap of crypto as a whole goes 4x this bull run, then so will the fund, right? And the only difference is, when it does that, I'm going to be switching the weights over to stable coins to protect those profits. And it's going to be done over a period of time. I'm looking at setting up like a Medium page so that I can post the quarterly reports there, because I'm not making a Discord for this. It's not a project. It's just a tool. It's a thing that exists. If you like it, great. If you don't, that's okay too. I literally do not care, right? I'm not trying to sell anything or raise funds to launch a project, nothing. It's just, it's there. If you want to use it,
It's pure.
Use it. If not, right. And that's what I love. It lets me play to my strengths.
So it's not going to stress you out at all, is what you're saying. Even if you are managing $1 billion in this, won't. That's amazing.
Because that's the thing. I don't even have access to the funds. Essentially, let me give a little explainer on how this sort of thing works. That way, because I believe in education and I don't gatekeep the knowledge. So let's talk about that real quick. If the fund is $1,000, right, and there's 10 people in it, and each of them put in $100, we're just doing this to keep math simple, then there's essentially 10 mini pools within the fund, right? And the KKF token is your receipt for your mini pool. That's why people buying and selling it doesn't influence the price. Because when you purchase it, when you put in $100 or whatever you put in, it then takes that $100, splits it into the different assets, and reserves it just for you, right? And the price that you're getting the KKF for is going to be based off of what is it going to cost to buy each of these assets in these amounts of weights for the money that you want to put in. That's the price, right? And then same thing for when you withdraw. If one of the guys in the fund, he deposited like $3,500, right? If he decides to pull out, it doesn't impact the price at all, because all it's doing is withdrawing his unique pool, however he chooses to withdraw it, either as a single asset or a basket, right? And then sorry, I had a brain, but I didn't sleep last night, and I wound up not taking a nap. I just couldn't fall asleep. But, so with this, you have your own section that's reserved, right? It was created for you, and it will go away when you withdraw. You're the only one who can access it. The only thing I control is the strategy contract, which then tells all the mini pools which assets to rebalance their weights, which assets to ditch, which assets to add. And when I do the asset rebalance, I can choose for it to take place over the period of an hour, 24 hours, or 72 hours. And I can also choose how much of the asset weight is being shifted to something else, right? That way, it's not just happening instantly. And if a longer time frame is used, a more favorable trade ratio takes place, and there's less loss within the fund from swapping and slippage, etc. Sorry, I see some questions. Funny Toro asked if there's any platform risk with Cassandra Finance. So all of the contracts that Cassandra uses has been audited. They were built in partnership with Balancer itself, because Balancer created the managed pool contracts and had them audited. And then Cassandra built on top of that. They utilized the managed pool contracts, which were created and audited by Balancer and are managed and run by Balancer. And they built the UI, essentially, that interacts with those contracts. And Balancer had all of their contracts audited. If you go to their docs, you can go to the different types of pools they have. You can look at the contracts. You can see the audits for them. So their system is very secure.
Awesome. BTK being very helpful. He said, good question. From what I understand, it's more or less a really fancy UI with some contracts that use Balancer for you. So the funds are on Balancer, not Cassandra.
Yep, that's pretty much right on the money there.
All right. I had something I was thinking of. Hold on. Let me see if I can remember it. If anybody wants to ask a question while I'm thinking right now, I had something. It was on, had to do with something you just said not long ago.
I don't know. I said a lot of things
I
because I
know,
talk
yeah.
fast.
I try to exercise good listening and not cut people off when I have a thought. Because like people always want to cut you off when they have a thought because they're afraid they'll forget it. But I'm just like, you know what? I'm just gonna listen, and if I forget it, I forget it. And I've forgotten so many thoughts. But I try to do that because it's polite, and nobody gives a crap what you have to say, anyways. You know, they just want to talk. They just want to hear their own voice. That's good listening right there. Don't be thinking about what you're gonna say because nobody gives a crap. I don't know. That was confusing, but
Yeah, a lot of people have a habit of instead of listening, they're just sitting there waiting to speak.
yeah, that's exactly it. I think you answered one of the questions I was going to ask about like how it works, and but when you were explaining that it's like when you put money in, it's your own individual pool, and that's why it doesn't affect the price, and when you pull it out, it doesn't affect the price. So that was cool. I guess the other thing I was going to say is like you're saying you don't really care, you know, how many people get into this. You kind of made it for you and your friends, and which is very cool. Like I said, it's very pure. That's awesome. But at the same time, um, there's you do get a 1% yearly fee for managing this. So that is why I would not mind if this grew to like $100 million. I would be happy for you if that happened. I mean, it would only be $1 million for you every year, which is, you know, to someone like me living in a trailer, it's a lot, but, you know, to an experienced trader like you, that's just like, you know, it's like last month or something. Uh, but I mean and that's a super low fee. And also, like when you go to withdraw, there's just the slippage, right? I mean, there's no fees associated with Cassandra when you go to withdraw. Is that something that you said?
Yeah, so if I go to click the sell button right now, right? Let me. I'll post a screenshot. Hold on, because I have it up. Let me show you. All right, there's the screenshot. Let me come back to this. Sorry,
And
I
it
run a little slower when I'm tired. So there's the screenshot.
wow.
So as you can see, that's a single asset withdrawal right there of 15.52 KKF, right? Value at market is $2,115. You do the withdrawal straight to USDC. Your 0.5% slippage is pretty much the only thing that impacts. You actually wind up with $1 more value of USD because I guess USDC is a little more than $1 right now. So you actually make $1 by
That's cool.
selling if you sell that amount. Um,
And the way, and you explained to me how that 1% fee is taken, like if you just have your money there for multiple years, and like let's say you want to sell everything after just 6 months, and you're like, when do I pay that 1% fee? That 1% fee is taken out little by little, like literally 1/365th of a percent is taken daily, which is
yeah.
nothing. It's insignificant how little it is. And like how much does like I don't know. This is probably something everybody knows except for me, but like how much does like a regular hedge fund charge you, like to be invested in it? Like what do they charge?
Yeah, so most ETFs and index funds will charge between $30 to $80 per trade. And then their management fee is anywhere between 1% to 3% a year, usually in the 2% average.
Yeah,
Um,
yeah. So it's better. You're saving at
uh,
least 50%.
well, you're also saving 3% versus trying to buy the assets yourself. So that's cool
There's that too. Yeah, and
because of the way the fund operates.
yeah, and it's a crypto ETF, so the government can't get their nasty hands on it. Um, I don't know. That's another good thing.
Yep.
Totally decentralized.
Yeah, and they're all excited because their ETFs finally got listed today, and I'm like, Psh, I got an index fund. You wish you had an index fund, BlackRock. Um,
And you did
so
it. How long
the
did it take you to put that together? Like half an hour? I mean, they've been working on this
um,
for like a year or something.
I don't know. I think I spent like 2 hours because I already knew which assets I wanted to put in there, but I wanted to do some testing, and then I was waiting for the Cassandra Dow team to change the API that they used for redoing the UI because it was lagging, and I didn't like that, so I said fix it, and they did. But they're happy to make whatever changes I asked because I basically doubled the total TVL of their
Yeah,
platform with my fund.
you're their star.
Yeah, well, the last like 6 tweets that they've made from their platform's Twitter has been about my fund, so I guess they like me.
That's awesome.
Um, I saw Chappie ask, "Is this project just Cyril or is there a team?" So I just want to clarify, it's not a project, right? Projects typically have to sell, pre-sale, raise funds, liquidity, all that kind of stuff. This is none of that. This is a tool that I already created. It's done, right? And no, it is just me. Uh, I know of maybe 2 people that I would trust to be able to properly adjust asset balances and weights and all of that
And I told him I
properly.
have a new baby, so I'm like, I don't have time. So
Um, and since I started this for just me and my friends and my trading Discord, they didn't really want somebody else managing the strategy. So yeah, it's just me.
yeah. Yeah, I mean, when you're by yourself, you can make decisions that need to be made quicker. You don't have to run them by anybody. So
Yep. Plus, unlike a project, if I get hit by a bus, it's not like funds are suddenly stuck in a multi-sig because I'm not around to sign it. It's not like the price can just crash because, oh no, the founder just died. Because the price is literally based off of the crypto assets within the fund, and you can sell it whenever you want, and you're not going to get hit with other people's price impact because they're withdrawing.
interesting. I mean, we wish you a long and healthy life, but that is interesting. I didn't even think about that. Well,
Yeah,
there you
yeah.
go.
So, if my wife decides to take me out for my life insurance policy, then, you guys are still good.
uh,
And
um,
yeah, no, Chappie, no need to apologize. If you have a question, ask it. That's the purpose of this, right? That's why Oliver asked me to pop up here. Because again, typically you only get AMAs if it's like a project that's trying to get you to get excited about what they're building, so you come buy their stuff, right? I didn't really intend to actually hold any AMAs for this because again, it's not a project; it's a tool. Here, read about it. If you like it, great. If not, oh well. But Oliver was like, he asked me if I could come on up here and just kind of talk about it and explain how it works, because a lot of people aren't familiar with what an index fund is or how it operates, and it operates very differently from the typical DeFi experience, and that's why I got such a culture shock when I came into DeFi. I was expecting it to operate like an index fund, like an ETF, like a stock, like a commodity, and crypto does not do that. It goes all over the place. Projects hold all the time. Stuff gets rugged all the time. Like, just can't.
that
Um,
that is curious. Like when you first started trading crypto, you just did blue chips, right?
yeah, on the Forex markets, actually.
So you were okay. Why did you want to get into DeFi? What attracted you to DeFi?
So it's kind of funny. I came into DeFi because the markets were being really stupid post COVID. Like everything was pumping because of all the stimmy checks, right? Um, and so were meme coins. And I couldn't understand why anyone in their right mind would buy these things, right? There's literally no substance to them. It just goes up because people are buying it. You're not even going to be able to sell everything you've got. Like you see people talking about the guy who spent $27 on PayPay and it became worth like 1.3 billion or some other nonsense number. Yeah, but if he tried to sell it, not only would he crash the entire price 99.9%, but he would only get like I think the number I worked it out to be was like 4 million, nowhere near a billion, right?
Mm-hmm.
So, but that's not the way index funds operate, right? Like, it doesn't matter who decides how much they want to sell. It doesn't change the price. The underlying assets do. And that's why crypto was such a culture shock for me,
That is interesting.
Initially. But, I didn't finish my story. Sorry, tired brain. So I wound up getting involved in DeFi because I'm sitting there talking with my trading group being like, I don't understand why people are buying these meme coins. The market's being stupid. Maybe we should try doing something stupid too, because if there's money on the table, the whole point of trading is that you trade with the volume. So if there's a bunch of volume happening somewhere, you might as well trade with it, even if you think it's dumb. And so I wound up in DeFi, and then somebody that I knew from the trading server asked me to help them with this online crypto university that was supposed to teach people everything about crypto. And I'm like, I can get behind that, right? So I started helping them with that. And then I asked them, why is it using the branding from this one DeFi protocol with a freaking quadrillion in total supply? Like, that's trash, And he's like, oh, no, it's not actually trash. It's actually really cool. You should check it out. They're doing XYZ. And I checked it out. And again, this was before I really understood like the way liquidity pools and DeFi and pairings and all that kind of stuff worked, because it's so different from traditional finance. But I was like, all right, yeah, it sounds cool what they're trying to build. I'll buy it. And I bought it. And thus began my DeFi journey.
All right. How did that first DeFi that project that you bought go for you?
I put in 3,600. It became worth 112,000. I thought it was going to keep going up, so I didn't sell it. I wound up selling it for about $3,650.
But wait, when it was at 112,000, you couldn't have gotten all of 112,000 of it because you would have crashed the price, right? If you tried to sell that.
So at that time, there was actually enough liquidity that I probably would have walked away with about 98K.
Dang.
Yeah.
That's not bad.
But then it turned out that it was a slow rug, and they wound up just kind of like slowly draining it over time. But and that's when I was like, you know what? A lot of people in DeFi don't really know what they're doing. So I started the trading server on Discord, because prior to that it was on Facebook Messenger, and then I started the consultation firm so that I could help these protocols. Yes, I was in Shiba Inu, not Shiba Nobi though. I was in Shiba Inu, but the one that actually nabbed me was called Goji. If you ever see us talking about trauma, and the reason why I cringe every time someone says the words generational wealth, it's because of that project. So, yeah. But fun stuff. That's how I wound up in DeFi. That's why I started the consultation firm, because I'm like, look, we need to bring elements of TradFi to DeFi, because this is the wild, wild, lawless West. And a lot of people are getting screwed over. And, like anytime I tell someone about the fund, the common thing I hear is, oh, where was this a year ago? Where was this 2 years ago? Where was this 3 years ago? Why doesn't everybody know about this already? And I'm just like, I just made it. Give me a minute.
Well, the other thing is people have to be wise enough to use this, because like when they first get into crypto, they might have heard just of Shiba Inu and Doge, and they're looking for that 1 million X or whatever, and telling them, this could 4X in the next year. I mean, it'll probably more than that. But they might not be as excited about it. But the thing is, it's a hell of a lot better to make a potential 5 to 10x than it is to lose 20 grand. But it's a little bit better, you know. But that takes, you know, that maybe they need to. I don't know if someone is like intelligent enough to listen to you just refer this to them, and they're like, yeah, I'll put some money in there. If they're smart enough to do that, then they'll reap the rewards. But not everybody is that smart. I don't know.
Well, the common mistake most people in DeFi make, right, is I'm trying to figure out how to put this. Trying to put this nicely.
Just lay it on us. Just give it to us.
All right. So the majority of people in DeFi don't actually understand how DeFi works. If they did, they would run screaming, right? That's just the truth of the matter. And the only thing that actually like makes money in the space is if you're either actively trading it, which over 85% of retail traders are not going to be able to do profitably long term. It's just a statistic, but everyone thinks they're the 15% that can, when in reality they're the 85% that can't, and that's okay. It's a learning process, and not everyone can right away. But they also go chasing those 20,000% pumps, right? Like most people in DeFi came into DeFi because they saw someone on Twitter or they saw someone on social media post some crazy gains they made, right? And they think that could be me, right? It's not going to be you, okay? The only people who make those kind of gains are ones who are insiders, right? Trust me, I could go on a rant about this for about 2.5 hours. I've seen the inside. I've been inside. I know how it all operates. It's super shady and shifty. Like the Solana blockchain, just take it from me. It is a scam, right? The entire blockchain is a scam. I'm not going to go into it. You can ask me about it later, but I don't touch it. But anywho,
you did make a token on it.
Huh?
You did make a token on it, right?
I was hired by some influencers to launch a meme token for them, and I'll do whatever you want me to as long as you pay me to do it, right? Yeah. Even if I'll advise against it. Like there's been several times I've advised you against doing something, right?
Yeah,
and
this is true.
Thankfully, you guys are smart enough to elect to not do it if I say don't do this, but not everybody is. So yeah, they paid me to do that, but the problem is, you come into DeFi because you saw somebody do something, and that plays. It's the same reason why people play the lottery, dude. Statistically, you have a better chance of being struck by lightning while being dealt a royal flush, right, than you do of winning the lottery. But you still do it just because, hey, somebody's got to win, right? It's the sheer misunderstanding of basic statistics and math. And so people come into the space not understanding that. They try to chase that pump, right? Or they have it in hands. They could have taken like a 10x, but they held it because they're like, oh, the narrative says this is going to the moon. If everyone's saying it's going to the moon, it's time for you to sell, right? It's just like the shoe shine boy when he gave Warren Buffett a stock tip. Warren Buffett knew it was time to sell. Just like I knew to start selling my Bitcoin when it was up past 55K because my dad asked me, hey, how do I buy the Bitcoin? Focus on your 2 to 4x, focus on 50% gains, secure those profits, because that's how you build it. Not by chasing high gains, but by securing 20%, 50%, maybe a 2x, and then taking your profit and moving on, right? And that's where a lot of people mess up. But that's what the fun is to prevent.
Yeah. If people put their money in this fund, you will secure those profits for them. They don't have to do anything. They just put their money in there, and you will move the profits into stables when you feel the market is getting too hot, and you'll DCA, right? So you'll DCA out. How it's not, is it DCA'd in, or is it just like when, I mean, not really, I guess, because whenever people put in money, that's when it goes in. So
right.
Yeah.
I do recommend, though, that because this is a fund that operates on the crypto market, right? If you're going to put in, like, let's say you're going to put in $500, right? Split it into $100 buys and spread them 2 to 3 days apart, right? That's called DCAing in. That's how you get yourself a better price average, right? Like, because if you bought this morning when the fund was at $140 a piece because Bitcoin went to 48K, right? And you bought all 500 then, you'd be down a little bit right now. But if you would split it, right, 100 in at 140 each, 100 in at 135 each, 100 in, you know, and so on and so forth, right? You get a better entry. You get a better cost average. And that's why I'm always preaching DCA in and DCA out, right? And so, yeah, when the markets are approaching my range for Bitcoin's high, I will start phasing the asset classes a couple percents at a time into stable coins to DCA out. We're not going to convert it all at the top, right? At the perfect top. It's not going to happen. You can't time the market, right? That's why you DCA in and DCA out. Nobody's going to time it unless you get like stupid lucky, which again, statistics, you're not going to be that lucky.
Yeah, so it's your responsibility to DCA in as you're putting money into the fund. It's Cyril who will DCA out for you. He will manage the fund for you. So your part is just don't blow your load all at once, you know, little by little. So there was someone who had asked, can they buy with BNB? And
So the fund is on Polygon, right? I believe you can use jumper.exchange, right? It's HTTPS ://jumper.exchange. And you can use that to send BNB from BSC to Matic on Polygon to a different wallet if you want to, right? So if you want to use a different wallet for your fund so you can track your growth easily that way, you can do that. You can send the BNB from your wallet to Matic on Polygon on your other wallet if you want to. That's why I use jumper.exchange anytime I got to move funds. It's great. And then you would use the asset on Polygon to purchase the fund.
And did BTK say that it actually was a little bit smoother using Matic pegged USDT or USDC? Did he say something like that?
I used the USDC, and yeah, he said it was a little smoother using USDC. If you run into an error, first ask yourself, am I using Trust Wallet? If the answer is yes, stick your phone up your ass and try MetaMask. Trust Wallet sucks. It uses its own RPCs. It is a new to crypto person wallet. So it's time to graduate.
But that's
Oliver.
weird. I use one. I can tell you the security is top level, and I don't ever worry about it. So.
Yeah, well, there's so many better options. If you need mobile, you can use MetaMask. It has been greatly improved since in the last 2 years. If you use desktop only, you can use Rabby, RABBY, which is infinitely better. MetaMask does their new, here's all the chains already imported for you. We have token detection now. You can bridge and swap within the wallet itself if you want to. So it's like, it's what most DeFi platforms are built for.
Right. This is just a question for me, because I don't use a cold wallet. Which wallet could I use that would be most secure without going the whole cold storage route? Since that is something else I'd have to learn.
Well, I mean, all of the hot wallets essentially have a similar level of security, right? The keys are stored on your device. So as long as your device doesn't become compromised, or you don't lose your device, or your device doesn't get stolen, and you don't connect to something dumb, your stuff is safe, right? The majority of lost funds in crypto is from people connecting to sites they shouldn't have, or phishing sites. That is where most crypto funds are lost. It's not lost through hacks on the retail level anywhere near as much as users connecting to something they shouldn't.
Right. There is also the security that you need to put in your passcode, like to get into your wallet. So if like someone steals your phone, they do need to be able to correctly guess, your passcode, right?
Yeah. I mean, well, it depends on the settings that you have set, right?
Yeah.
So you can turn that on and off, in a lot of different wallets.
I
Like,
gotcha.
yeah.
Uh,
But
funny, Turo is saying if you're serious about investing, don't do crypto on your mobile. I mean, to me, like I'm like, but if my computer's at home, like, not, I don't know. I just always
so
have my phone with me.
yeah, I mean, I do everything through my phone up to a certain point, right? If it is a wallet that has more than X amount in funds, a wallet that I would actually be upset about losing, then I don't use my mobile for it. I use either the laptop or the desktop, right? Depending on which wallet it is. I also have a tablet that's never connected to the internet for the super stuff, that I just want to send to. But yeah, I mean that's
And
more of a
the money in this fund is somewhere. It's not on any of your devices. It's
no.
like, yeah, it's somewhere else that's secure.
Yeah, and the final thing I'll say about wallets and whatnot is if you have a cold wallet, do not connect it to any DApp, right? The only thing you should be using a cold wallet for is sending funds to and from your hot wallet. That is what you should connect to the DApp, okay? If you are connecting your cold wallet to the DApp, you can still be compromised, okay? Your wallet, it doesn't matter whether it's a cold wallet or a hot wallet, is only as safe as what you connect it to, okay? All right,
Mm-hmm.
sorry.
All right.
But yeah, so we're over the hour now. I hope you guys all have a pretty good grasp of what KKF is. If you have any questions, there is an actual room for it. The whole point of me not posting or sharing links to the fund is that protocols such as one can benefit from their referral link, right? So be sure you check out the room for the Krew Fund referral link. That's where you'll be able to utilize one's referral link to get into the fund. Much love to all of you. If you want to use the tool, great. If not, awesome. I'm happy to know that you're, at the point now where you can manage your own funds successfully and profitably by yourself, and keep up the good work.
I am not. Just want to throw that out there.
I'll see you in the fun later.
All right. Hey, and you'll be on Rags to Riches in like an hour and 20 minutes, won't you?
A little less than an hour because it starts at 7 Eastern time. Yeah.
Oh, whoops. There you go.
Yep. I'm gonna go stuff my face with some food. Maybe give a quick wash to my hair so I don't have to wear a hat. I had serious hat hair today, so yeah. See you guys
Awesome.
all later. If you have any questions, make sure you ping me because I turn notifications off for pretty much every Discord except pings that specifically mention me. So if you got a question, ping me. If not, Oliver, you recorded this, right? Because I forgot to. So catch you
Thank
guys all
you.
later.
Thank you very much, Cyril, and we look forward to how amazing this thing is going to be and all the other stuff. So awesome. Thank you for being here, man.
Yeah, sounds good. You guys have a great rest of your day. I know that Friday's tomorrow, so TGIF, and enjoy your weekend.
Thank you. You too. All right. See you guys.